Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the week of September 26th through the week end of September, where we'll talk about making money from the Fed interest rate decision. So y'all are probably aware that the Fed, the FOMC, raised their base interest rates by 75 basis points, and we'll talk about what all that means and how can we make money from this interest rate decision. So please stick around. We have a lot of strategies on how we can make money from the Fed interest rate decision, how we can make money in a rising interest rate environment and a high inflation environment. And again, a lot of strategies to hopefully help you make money from the Fed interest rate decision. So please stick around for the strategy section. And then tomorrow in part two, we will apply all our market analysis, all our strategies we discussed today, and apply those to which individual stocks, ticker symbols, etc. we want to put on our watch list to look to potentially buy next week, the week of September 26th through September 30th. Good morning, Gam. Thank you for joining us for the live stream. And happy birthday if it's your birthday week. Thank you for joining us. So again, we'll jump right in. I'll probably spin through the market analysis pretty quickly because we probably all know it was a bloody week in general. Here's how the market ended up. This is the homepage of FinViz. We can see all the indices were in major decline yesterday. Tried a late day recovery. Again, many more decliners, many more new lows. The vast majority, almost 88%, are below their 50-week moving average, and about 86% below their 200-day moving average. And this is actually showing bullish, but that was probably an indication of the end of the day. So good morning, Flip of the Shippa. Thank you for also joining us. Glad to see you as well again. So again, we can see in the heat map almost everything is red. The FANG stocks, the high tech, Tesla, etc., took big hits. The only greens were J&J, Home Depot, just a few greens in there. See the most recent news. Don't look for a bottom until the dollar cools down. We talked about how to trade the strong dollar. We'll reference that again. We've been talking about that for several weeks too. How to survive the bear market. Again, we've been talking all year that we're in a bear market, and we've discussed strategies, how to make money in a bear market, how to sell the rips in a bear market. Again, pretty much all year. So we have plenty of strategies for that. We hope that those strategies have helped you make money in this declining bear market. So, okay, and then we can see the futures. We saw energy got pummeled yesterday. Oil was way down, still below 80. Natural gas is below 7. Gold, silver got pummeled. All the dollar-denominated commodities got pummeled due to the strong dollar. Again, we've been talking about this. As long as the dollar's strong, we expect that. So also, we saw the euro was down to 0.97, below 0.97. The British pound is approaching parity with the dollar, and we see this highly inverted Treasury bond yield curve where the short end is around 4%, the long end is 3.6. But those rising yields also took their toll on the growth stocks, FANG stocks, etc., tech stocks. So again, we'll talk about all those strategies in more detail in a minute. Look at the indices real quick. We see that steep decline, broke down through that trend line and is in steep decline. I believe it broke its June low, the S&P did. So again, if we look at the weekly, there's the June low, it's 362.17. This is showing just above the June low. Now, I won't babble too much, but my expectation is that we'll test that June low. I expect a lot of the smart money, as they term it, to pour in based on they're probably sitting there at that June low, and I expect money to pour in at that June low, and I'll talk about how we're playing that as well. But I would kind of expect at least a bounce off that June low. Now, having said that, we're still in a bear market, so it could break down below that June low, especially if there's, further negative news, etc. So, and again, we've been talking about, we're in a declining bear market. We see the NASDAQ also is very close to its June low, 269.28. It bottomed at 272. So again, same thing. It's below its moving averages. I would expect a test of that low and then a bounce, and then we'll see where we go from there. Same thing with the Dow. Dow looks like it broke its June low, 292.40, 296. So the Dow broke its June low already. Now, again, we've been, I don't mean to beat a dead horse, but we've been talking about, we're in a bear market, and flip the charts, flip your mindset, play the downside. We've been talking about that all year, so hopefully people are taking advantage of those strategies and making money. So Russell, again, very similar. It's probably very close to its June low, 162.78, 165. So same scenario. We finally saw a pop in the VIX, although it really didn't pop that high. So we didn't see an all-out panic. It popped above 30, came back down. We'll see where it is right now. I think it's sitting around 30, 29.92 right at this second. So again, it popped up to 30 and came down pretty quickly. So, it's not an all-out panic. We may see some further elevation in the VIX, and we'll talk again about how we're playing volatility, how we're playing the VIX as well. So good morning, Blind Trader. Glad to see you. Thank you for joining us as well. So we'll look at the groups and sectors, etc. Again, we know it's pretty much red from the past day, but if I go to the groups tab in FinViz, we can see the best and worst performing sectors on Friday. Again, basic materials, energy got clobbered. A lot of that has to do with the strong dollar. We saw healthcare try to make a little bit of a recovery. Real estate made a little bit of a recovery. We saw some technology. We've seen a lot of sector rotation. We've been talking about that for weeks and weeks too. So it would not be surprising to see these worst performing sectors get a boost early next week. So watch for that. Watch for the sector rotation. Again, we've been talking about that strategy for quite some time as well. So when you see that sector rotation start, there are opportunities for short-term trades in that area. See longer term, the consumer defensive and utilities, those tend to perform better in a recession, in a bear market, etc. So that's not surprising that they were the best house in a bad neighborhood, as they say. And again, we saw energy really got pummeled this week. Basic materials was up and down. So, and for the month, again, technology and energy were the worst performing. We can see for the quarter, though, energy still held up quite a bit, which is probably it was an overperformer. So again, see a lot of profit taking in energy and oil, natural gas, etc. And a lot of those moves, I believe, in oil and natural gas have more to do with profit taking and technicals than they do with supply and demand. We talk in more detail about supply. We've been talking about supply and demand, but we can talk about it more as well. So I would keep an eye on the longer term charts, and we may see rotation back into basic materials if the dollar weakens some. So good morning, Tanbeer. Thank you for joining us. Glad to see you again as well. So take a quick look at industries, and we'll talk about an industry that I'm particularly interested in right now. So we can see not a whole lot of positive. I think the home improvement thing is Home Depot had good numbers. Some of the REITs were recovering a little bit. And we see the worst performers, again, energy, oil, natural gas, basic materials, silver, gold, etc. Were the worst for the day. For the week, not a whole lot of positives. And again, let's see what the worst ones were. Again, energy, solar, I'm sure basic materials. Again, one we're going to look at tomorrow in more detail, particular stocks. I believe Solidago pointed this out to me. And yes, with the big decline in energy, I suspected that they're pushing uranium down with the whole energy sector. And I think there may be some opportunities in uranium. So we'll look at that again, individual stocks and charts in the uranium sector in more detail probably tomorrow. And again, thank you, Solidago, for pointing that out in our Discord. He saw UROY, hit an alert and let us know about that. It's a great thing about our BeachBum Trading Community Discord. You can find an invite in the description box below. We've got traders helping traders. We're all there to help each other succeed in our trading. And again, people will point out when they see something that looks interesting, and it give other traders the opportunity to also benefit from that. So again, those are things we'll look at in more detail tomorrow. Okay, so let's talk about the economic news, and we'll probably spin through a lot of it and talk in detail about the Fed interest rate decision and how we can make money from that. So Monday, Tuesday were pretty boring. They had some housing data. It didn't really move the markets a whole lot. Got mortgages. We know the housing market's rolling over. You can see mortgage rates are up 6.25%. Existing home sales wasn't bad, but that's August. One thing that was interesting is oil inventories. You can see it came out kind of low, and oil still declined. So again, I think that's more of a sector rotation factor that's driving oil down than a supply demand at this point in time, because normally that would cause oil prices to go up, along with some of the other global events going on. You would think oil would go up. Same thing with gasoline. Inventories went up, but again, I don't think that had a major factor. So just a sec, let me grab a drink, and I want to talk about the whole Fed interest rate decision. Okay, we all know that they raised the interest rates by 0.75 from 2.5% to 3.25%. Here's some of the headlines. I copied out some of the news articles that hit the wire around that time, so you can see, what the news is. Fed predicts a big slowdown, big rate hike, interest rates by 75, aggressive. We've been talking, all the economic data we've been seeing for some time allowed the Fed to be aggressive because the economy is resilient, the job market's resilient, etc. So we should expect continued aggressive rate hikes going forward. There's no reason to believe otherwise. So Powell signals more pain. So recession, we've been saying we're in a recession, and we've been preparing for a recession for quite some time. Hopefully, again, our strategies for making money and trading in a recession have benefited you. I would encourage you to revisit those strategies. We are publishing them again as separate videos as well, and we'll review those in a second. But another thing I wanted to point out that's going to be important going forward is the interest rate projections going forward. So we can see they're projecting for 1 year from now for the interest rates to be at 4.6%. They're currently at 3.25%. So that says in the next year, we're going to go up another, 1.35%. So we're in a rising interest rate environment. And again, we've been saying this for quite some time and preparing for it and discussing strategies on how to make money, how to trade in a rising interest rate environment. So again, we expect at least over the next year, interest rates are going to keep going up. How aggressively exactly, it's hard to tell, but bottom line is they're going to keep going up, and they're going to go up to at least 4.6, and they're adjusting those upward. So one would expect the possibility that those adjustments may go even higher, may go to 5%, etc. Just a quick reminder, this is not financial advice. We're not financial advisors. This is for education and hopefully some entertainment purposes only. So also you can see the curve. So, they're projecting 4.4%. And then you can see it drops off in the forward year. So then in second year, 3.9, third year, 2.9, longer term, 2.5. And when we look at the treasuries and we talk about the effects on stocks versus treasuries, etc., versus what they call TINA, and I almost titled this video, bye bye Tina, or no, Tina no more, or something like that. But I didn't think a lot of people necessarily knew what TINA stand for. So I'll explain it a little bit more when we get in our strategy section. But nowadays there are alternatives to stocks, and that's part of our strategy here. So here's some comments that Powell made. I listened to his talk while he was talking and tried to glean some, particular quotes of interest out that I could share with you. And here's some things. The labor market continues to be out of balance. So again, they're not concerned about impacting employment, unemployment. In fact, they're trying to drive the labor market into balance. They had a 4.4 projected unemployment rate. I can't recall offhand what it is right now, but it's much lower than 4.4. So that's kind of what they're thinking, is they are going to keep at inflation until they kill inflation, and they're not concerned about unemployment till it's 4.4 or greater. Good morning, Specula. Thank you for joining us. Glad to see you here as well. Hope you're doing well. So another quote that he made is, he said, "We need a restrictive policy stance likely for some time." So that means the quantitative tightening, selling off assets off the Fed's balance sheet, removing money from the monetary system. They need to be restrictive. So again, that's an aggressive stance. As the economy is going to shrink, we're in a recession. We're going to continue in a recession. And tightening monetary policies. They are committed to get inflation down to 2%. They're still saying they're going to get it to 2%. Now, a lot of the talking heads don't think they can really get it back down to 2%, given how hot and how sticky it is and has been. But that's their goal. So again, that all says very aggressive, very restrictive, and that's what we should expect, and that's how we should prepare ourselves. So not currently or anytime soon considering selling mortgage-backed securities. We'll see if they change their mind in those regards. Thank you very much for that super chat, Specula. That is greatly appreciated. We greatly appreciate all your support and all your help. Specula has been one of our longtime supporters, and we greatly appreciate all of his support and help while we've continued to try to grow for the benefit of all of our fellow BeachBum traders. So another 100 to 125 basis points expected by the end of the year. We'll see when those additional meetings, when to expect those additional points. But as you can see, we expect another 125 basis points. Again, I lean towards the high end of that. Again, just given this situation as we've seen it. So, and Walter, thank you for joining us as well. Glad to see you again. I hope you're doing well. So Thursday we got jobless claims data, and again, it wasn't really negative. So again, Fed can be aggressive because continuing jobless claims is below expectations. New jobless claims below expectations. So again, the job market's still resilient. Powell says, it's out of balance. It needs to get balanced. So, and they're not seeing unemployment pop up, so they have no reason to take their foot off the gas, as it were. So, and we also saw natural gas storage was quite a bit above what the expectation was. And natural gas did decline on that. So that was interesting development, that we have more supply of natural gas, and you keep hearing of all these issues. We've also heard some things out of Europe that they're trying to reduce their demand, they hit quota on their storage, etc. So natural gas now, again, is in a downfall, down below 7. We'll take a look at it in the futures as well. So we'll go to investing.com and look at the economic calendar for next week. Again, you can find the link in the notes. For anybody that's relatively new, here's our weekly trading game plan notes. It's a Google document. I'll have a link in the um, description box below to the folder that contains all of our Google documents for many of our previous game plans. It's publicly accessible, so you can reference all the links, all this information again at your leisure. And I'll probably put a direct link in the description box below or in the comments, I guess, after we're done. I need to remember to put the link itself in the description. I keep forgetting. My apologies for that. So next week, well, I'll flip back to this week. We see the housing data. It was a little below expectations. Permits was a little bit below expectations. Housing starts was okay. So that's kind of the housing data from Monday, Tuesday. It wasn't really very exciting. Spacula says almost time to add yen again. I will talk about that tomorrow, but just FYI, we're already in yen. So I was a little early, but we can look at that again tomorrow too and talk about that. So next week, once the Fed does their decision, then we get all the Fed presidents come out and start talking. There was a Powell talk, I guess, on Friday. I didn't hear anything interesting come out of that. I don't expect him to say anything different, and then Powell's going to talk again on Tuesday. Again, I expect him just to keep reiterating the same thing. They're going to be aggressive. They're going to keep at it till inflation's dead. Now you're hearing the talking heads. I said this weeks ago. Powell does not want to be the one to go down in history to have let inflation get out of control. So he's going to Volcker the economy if he needs to, and he even evoked Volcker in his Jackson Hole speech. We had our trading game plan where we talked about the fallout from the Jackson Hole speech, and again he evoked Volcker. He's willing to go to whatever it takes to get inflation down. So that's what we should be prepared for. And until they see inflation coming significantly down, I don't expect any change in stance. So again, my opinion, not financial advice, but that's how I'm preparing. That we expect interest rates to keep going up until inflation comes down, and we'll talk more in the future about when do I expect inflation to come down, because I don't want this to get too long, but not in the near term. So and we see housing prices, kind of standard stuff, new home sales, standard stuff, mortgages. We get crude oil 10:30 on Wednesdays and natural gas on Thursdays, standard job, GDP data. So this will be a revision to Q2. We'll see if anything changes. I don't expect much to change. Jobless claims, I think, again, more of the same. We get PCE again, we'll see. But again, I don't expect some major changes. Again, more Fed speakers, PMI. We get some sentiment data. Again, I expect it to slightly improve. They're showing no real improvement. But I think the trends are going to be, kind of more of the same of what we've seen in terms of the economic data, unless something else causes a major change. So just a reminder, as this economic data comes out, I try to capture it from investing.com, post it in the Surf the Markets channel in our Discord. Again, you can find our Discord's free to join. You can find a link in the description box below. I'll see if I can get it in the chat as well or on the banner. So again, please join us in the Discord and let's all work together to help each other succeed in trading. So another thing I've started doing recently is when I'm up early, you can see sometimes, I guess I've been waiting until a little bit later, but sometimes at 4 a.m. When I'm up watching the Webull open, I'll look at the futures. Like I said, I've started doing it a little bit later because a lot of times at 4 a.m. the futures are pointing a different direction, and by the time it gets closer to market open, they've changed direction. So I think it's helpful to more people to get a little bit closer to the market open. But you can see I've been posting, the strength of the dollar, which direction the dollar is pointing, and which way some of the other futures are pointing. And I would love your feedback as to um, if you find this helpful. Is this worthwhile? Would you like to see me continue to do this? And if so, I can continue to do that, post it in the Surf the Markets channel. The Blind Trader says, what room is the main chat in Discord? Beach Party is the public main channel where most people just talk about anything regarding trading. We have channels for different types of asset classes. So if you want to talk specifically about ETFs, if you're a Forex trader, futures trader, options trader, etc., we have channels for the different asset classes, different trading platforms. If you're using Thinkorswim and you want to talk about that, also different styles, different tools, Chartmill, FinViz, etc. So, and if anyone has a suggestion for changes to the Discord, changes to our videos, if you'd like to see due diligence on a video, we have a suggestion box, and you're welcome and very encouraged to put your suggestions in the suggestion box, and I will do my best to take those suggestions and make improvements. That's our goal. Is this whole community, everything we're doing here is for you all, and to share our knowledge, help you succeed in trading. We want to make it as beneficial for all our fellow BeachBum traders as we possibly can. So but I need your help to know how to do that. What is of most benefit to you? So I'll quit babbling about that. So, and bring your fellow traders, please. Tell other people to join us. The more people we have sharing knowledge, information, lessons learned, etc., it's for everyone's benefit. So enough of my babble right now on that. So the next FOMC meetings, there is no October meeting. So we've got now a lull until November, and early November is the next FOMC meeting. So we saw we need, another 1 point something point rate hikes by the end of the year, and there's two meetings. So is that a 75 and a 50? Yeah, probably. Could even be 275s if things don't cool off. So yes, welcome, Sabrina. Glad to see you here. Thank you for joining us. Earnings season, we're pretty much out of earnings season for now. Again, you can see the link to the earnings calendar in investing.com. You see who's coming up, if it has any impact on you. Again, we should be wrapping up earnings season pretty much. There's Cracker Barrel, some restaurants, BlackBerry, etc. I haven't heard anything that's really exciting coming up for earnings. There's Nike, Micron, so semiconductors. So if you're trading semiconductors, Micron might be a factor, Rite Aid, so some pharmacies, etc. And I'll show you in a minute in Webull where you can also see the very near-term earnings calendar. So we're going to jump over to Webull a second. You can see right now they're still doing their 12 free stock deal. So if you're not already using Webull, it's our favorite trading platform. I won't belabor it, but again, if you're not already using Webull, if you just open an account, put $1 in, you can get up to 12 free stocks, each valued up to potentially $3,000. So again, we really like the 4 a.m. to 8 p.m. trading, as well as some of the ways they have good to cancel orders. So yes, and thank you, Spacula, for reminding everybody. Again, our Discord is free to join. The link's in the description box below. It's also on our homepage. Our homepage is beachbumtrading.com, bum without the U. We have all these links to our social media, our trading tools, trading platforms, etc., Discord, so some of the other Discords as well, where we hang out, and a number of reference links. You can find options calendar, the OPEC meetings, the Fed meetings, etc., also in the links category on our homepage. So We hope that makes it quick and easy for everybody to find, reference, etc. So we'll just real quickly look at the market screen. This is the online browser version of Webull. Again, we pretty much know, more decliners than advancers. The extreme advancers was very small. The number of decliners it's mostly a small decline, but it still, dragged the market down. We see here the NASDAQ really took the brunt of the outflow on Friday. NYSE was outflow, but not as severe. And again, as I promised, you can see in this calendar tab, there's a near-term view of the earnings coming out, and you can see if it's before market open, during market, after market close. So you can see what's coming up in the near term. Not going to spend a lot of time here because we know it's mostly red, but I'll look at the weekly for the best performing industries. See if we see any green. So we see in some investments we're at least not bloody red. Most of it's red. That's surprising. Even aerospace defense was pretty red. We've got utilities. Yeah, we'd expect some green in utilities. But again, almost finance. Again, the increased interest rates benefits banks to some degree. So again, the financial sector, but they've run that up already. Again, we'll just very quickly look at the ETFs. Again, short on the Dow. Again, I'd expect mostly short on the FTSE Europe, short on the Russell, short on the S&P. You can see two of the popular shorts on the S&P, SPXU and SPXS. Up on the volatility, UVXY, VIXY. We look at VXX as well, short on the Russell again. And short on Europe, short on China. So again, not surprising. Industries, mostly red. See if we see any green. Financial services, we'll look at commodities. Again, nickel and gold were somewhat positive. I think gold, we'll see in the futures, it looks like, they were pummeling it pretty hard, but it was holding up, and it was trying to swing back up. So see if we see okay, so bonds, and we're going to talk about bonds as part of our strategy. You can see these short-term bonds are very popular, and it was increasing. Got some Asia. We got 7 to 10-year bonds. Extended duration was up. So all the bond funds, you can see that's what's green there. Forex, we see China, Yuan down, Swiss franc down, Canada down, and we'll look at the future Euro down. So again, we'll see this in the futures as well. So let's jump to the futures. So this is the futures tab in FinBiz. Again, we've got other videos that talk about this in more detail, how to use this tab, different time frames, etc. But we can see, we see the declining market. It's very clear it's bear market. We see these pops, these bull rallies in the bear market. We've talked about those and how to play those. Sell the rips in a bear market. And again, we see they're all declining. They're all testing that June low. If they break down below that June low, then, it's quite a ways to fall. Russell looks like it's breaking. European broke down. DAX, all the foreign markets broke down. We see the VIX popped up above 30. Flippa says TQQQ has been seeing massive volume. Yeah. We'll talk about when how to play both these bull rallies and potential turnaround when we see it. Tomorrow, when we get, hopefully you'll come back tomorrow. Again, we'll look at all our ETFs, and that will include TQQQ, and again, all the longs on the indices. We'll see where they're sitting relative to their support, and look for opportunities. Is it time to play the swing up on any of these indices or any of these commodities? We'll see that in our ETF spreadsheet. So we see, the sharp decline in oil. Also, a couple days of sharp decline in natural gas. We're sitting below 7. Kind of want to wait to see where the bottoms are on these guys and swing back up. And we'll talk about probably tomorrow how to play the volatility in energy, and whether it be a short-term day trade, scalp trade, etc. And I know a number of our fellow BeachBum traders have been making good money scalping the energy stocks because they have been very volatile. And we've got both short and long ETFs that we can swing trade or scalp any of the energy stocks, any of the commodities, without having to short specific stocks. So see gold, again, all your dollar denominated commodities got hit with the strong dollar. We see all of them, copper, etc., but a lot of them haven't really reached a bottom. We'd have to zoom out on gold to see where it sits relative to its bottom. I want to talk about treasuries. Talk about the treasury futures here. I believe Tanavir has been asking for some time about TLT. And here I found this very interesting. We're long TMF versus TLT, but you can see the longer term treasuries it looks like they're starting to turn. I see that as a very bullish sign. They should turn because the longer term interest rates are significantly lower than the short term interest rates. So we see the 2-year notes is in free fall. The 5-year is pretty much in free fall, but the 10 to 20s is more stable. And again, this is part of our strategy. Is the short-term interest rates are much higher than the long-term interest rates, and we see these yield curves are inverted. So I think there's an opportunity here in swinging the longer-term treasuries if they are truly at a bottom. TLT, TMF are opportunities, I believe. If you're playing the short term, obviously on a momentum day, etc., you'd want to play long the yield or short the price, right? Because they're pretty much in free fall until they get above 4%, And again, we're going to talk about that more in the strategy section. So Walter's, talking about natural gas. Walter's a great natural gas trader. And yes, we'll see where it bounces again. We'll see how the global news affects it, or if it's just a technical decline and then a swing. And I'm glad that you like the treasury ideas, Walter. Yes, and we will look at those individual ETFs again tomorrow. But I do think that swing in the longer term treasuries looks attractive now. We're also going to talk about the Forex markets. As you can see, the dollar, hit new highs, new 20-plus year highs, been very strong, surging. It went to 113, I believe, at one point, which is driving all the other currencies down, with a little bit of an exception in the yen because they're doing some manipulation of their currency to keep it from continuing to devalue. So that was part of the news. And then the British pound, they come out and they said they're going to do tax cuts. Markets didn't like that. And you can see the British pound plummeted. It's near parity. So we'll talk about Forex opportunities as well and strategies. Okay. So I've got a lot of strategies here to talk about. I'll try to rattle through as much as I can. A lot of this, we've been talking about for a while. So how do we make money from the Fed interest rate decisions? Again, we've been talking about how to make money when interest rates rise for quite a while, and we've released these videos with our previous strategies. One's been released, one's currently unlisted, but since you are watching this game plan video, if you access the link in the notes, again, the notes is a Google document in that Google Drive folder. You'll find the link in the description box below. You can watch these unlisted videos, which has our further strategies on how to make money when interest rates rise. Also, we did one on how to make money trading with a strong dollar. This was part of our previous game plan as well. Here's the time. Here's the link to get you directly to the strategy section of that game plan. And I'm going to try to publish that piece as a standalone video as well, since as we see, the surging dollar, which is part of a consequence of the rising interest rates and the Fed's interest rate decision, as it's making the dollar surge even further. So here's our strategies on how to make money trading with a strong dollar. And again, here's the link to the game plan notes with the notes from that portion. So let me get a drink a sec. And we're going to talk about discounted cash flow models very quickly, what that means, what rising interest rates mean in terms of discounted cash flow and the value of stocks. Okay, and I'll probably do this, and you guys can give me your feedback as to whether this would be valuable to do a future videos explaining more how discounted cash flow models work. But I've added some links, both from Wikipedia and another site, and you can access those and read those in more detail. I'll bring up the Wikipedia one just real quickly. I think it's useful. The point being is that these formulas, you see that the denominator of these formulas is interest rates, okay? So, and again, if you're interested, I can do more detailed videos on, how do discounted cash flow models work? What does that mean? How do you compute discounted cash flows? But the net of it is it's an analysis for valuing a security. So, for example, a stock. So how do you value a stock in the future? What price would you pay for a stock with your cash today? How do you figure out what it's going to be worth in the future? So again, this is what most analysts typically use as a discounted cash flow model. And the point being is that we could see that the value is discounted present value of the future cash flow, and interest rates appear in the denominator. So as interest rates increase, the value of the stock is decreased. So the price that a person, an analyst, an institution, what they call smart money is willing to pay for a stock decreases as interest rates go up. And so we've seen the growth stocks, the tech stocks, particularly the unprofitable ones, the biotechs, etc. If they're not making money, their value is decreasing because interest rates went up. So what someone will pay for them now, if they're not going to show a profit for 5 years, 10 years, etc., decreases as interest rates go up, and therefore you see the price go down. And it's going to keep going down unless they have some way to improve their cash flow. But if they're going to continue to be unprofitable for 5 years, 10 years, etc., and interest rates are going to keep going up, then the price that people are willing to pay for those stocks is going to continue to decrease. So you're going to continue to see the price go down. So that's why I wanted to share that with you all. Is again, the growth stocks, the biotech stocks, if they're unprofitable, what someone is willing to pay for them is going down because of rising interest rates. So their price is going to go down. And the number of investors interested in those types of stocks is going to go down. So I hope that makes sense. Again, we can go into more detail. We can discuss this further in the Discord. But again, here's several links in the notes that you can read more about how do discounted cash flow models work. What are the other factors in a discounted cash flow model? how do you calculate it, etc. So I know there are other sites too where you can plug in your numbers, get a discounted cash flow model result. There's other YouTubers who use this to value stocks pretty religiously. So you can also get more information there. And again, we can talk about this further if and when you all are interested. But I think it's important to understand that as interest rates rise, unprofitable companies, these growth stocks that went on a tear in 20 when the cost of cash was zero. Well, the cost of cash isn't zero anymore, or the value of cash isn't zero anymore. Now it's 4%, roughly. So important to understand, in my humble opinion. So I wanted to share that. Also, we talked about the no more TINA. TINA is there is no alternative. And again, 2020, much of 2021, when interest rates were near zero, people would say, well, there's no alternative to stocks. If you want to get any kind of real return from your money, now there's really no alternative to other than putting your money in stocks. And that was true. Well, now there are alternatives. And so now I believe you're seeing money flow out of stocks into bonds. And you see, we're talking about bonds because now bonds offer a real return and treasuries are tax-free. So your returns on a treasury, U.S. treasury, is tax-free. So if you're earning, we saw the 30-year was 3.6, and the 5-year was 3.9, and the very short term, the 2 years, and there's even month time frame bonds are paying about 4%, and they're risk free. So they call them risk free because the only reason you wouldn't get your return was if the Treasury or the U.S. government defaulted. So that has zero risk. So people say, hey, I can earn 4% of my money with zero risk versus risking it in a growth stock, and I might not make 4% and I might lose my money. And then we've got I bonds that are paying their inflation adjusted bonds, and they're playing. I haven't looked at them recently, but I know it's over 9%. So I can put a limited amount of money in an I bond for a year, and I can make 9 to 10%. Again, risk free because they're backed by the U.S. Treasury. So again, this is why it's important to understand that now there are alternatives. And so again, your institutions, your quote smart money, that they're going to weigh the return and the risk, and they're going to put their money there, which means money's going to flow out of stocks, particularly growth stocks, high risk stocks, and it's going to flow where there is a safer real return. Another area I'm hearing a lot of people talk about is real estate. Real estate's rolled over, but I know people are pooling money waiting for the prices of real estate to come down because there's opportunities. Real estate is a good hedge against inflation, and they're looking for opportunities in real estate. Now, stock-wise, there's, and we'll talk about this, is REITs. One way to play real estate if you want to trade in a stock type portfolio without buying an actual physical building is with REITs. So that's one of the things we like for this rising interest rate environment, high inflation environment, is some of the REITs. I'm highlighting really anything that paying, if you're going to stay in stocks, okay, what do we need to see? Well, I need to get a 4% or greater return on my investment, or why wouldn't I just put it in a bond and get my 4%, and I could potentially get it tax-free. So if I'm going to leave it in stocks, I need to get better than 4%, and I want the risk not to be, outsized relative to that return. Well, some of these REITs are attractive, so I don't like the mortgage-backed REITs due to rising mortgage prices. I think that they're going to diminish. Their business is going to diminish. The demand's going to diminish, but some of these are not mortgage-backed. So tomorrow we'll talk in more detail about O, which is realty income. We've owned them, traded them before in the past. We own them again, as you will see tomorrow. And we'll talk about how to make money with realty income. We also own Stag, which is an industrial distribution center type REIT. We've owned LTC in the past, which is healthcare real estate. We also own these ETNs, which are monthly dividend paying. Some are very high. USOI is on oil, and we bought that one recently, and it's paying 20 something percent a month. Oh, well, that's the annual yield, but it pays that out monthly. But you can see it's very high yield relative to a bond at 4%. So again, the thought process you need to I'm just suggesting, again, not financial advice, but my personal opinion is when you're evaluating stocks, you need to start thinking about these things to say, okay, what's going to be my return on this investment? Is it safer? Would I get a better return in some other alternative? Because that's, again, what a lot of the money is thinking is what's the best return I can get for my money with the minimal risk, particularly when we're going in a recession. It's, quote, a scary time for some. And so I want to minimize my risk, maximize my reward. So these, again, are all part of the thought process. So again, so this doesn't get too long. I mentioned I've got a lot to cover. I'd love to hear y'all's feedback in the chat, in the comments. Tanvir asked, can you buy I-bonds within Fidelity? You have to buy I-bonds directly from the treasurydirect.com site. That you have to buy I-bonds directly from Treasury Direct. Maybe it's .gov. Instead of .com, but just search for Treasury Direct or I-bonds, and you go directly to the Treasury. You have to buy them directly from the Treasury. You can't buy them through any brokerage account. So I hope that answers the question and helps. And I know I should probably do a video on I-bonds and how they work and all that. I'm not particularly interested in I-bonds myself, just because they're it's a limited amount you can put in them. I think it's about 10K per person or per tax ID number, and again, you make 10%, but my opinion, my personal belief is in a year I can make better than 10% by actively trading. So I would personally rather use that money to trade with and compound versus sticking it in an I-bond for a year. So that's, again, my opinion. It is safer in an I-bond. For some people, that's a great alternative. So a couple other quick strategies before I go. Another thing to do is, when we're in this bear market, we're into a recession, we might have to kind of wait for the turnaround, particularly if you've got positions that are underwater, but you want to hold on to them. You don't want to sell them. You like the thesis. You think the company will survive the recession. You think it will recover, but you can't make any money selling it right now. You don't want to sell it. A strategy we're using on positions like that is sell covered calls against them. And you're essentially generating your own dividends by you sell the covered calls, particularly when it's up, buy them back cheaper when it drops, and rinse and repeat. You'll see several postings in our Discord to that effect that recently, we've done more of this, selling covered calls, sell it when it goes up, buy it back cheaper when it goes down, keep the pure premium difference, and rinse and repeat. Just keep doing it over and over and compounding that money. So again, that's a strategy. I really like that strategy. I'm looking at working on some further systems, automation, etc., so we can leverage this strategy better. So again, we've got several videos on how to sell covered calls in both Webull, E-Trade, and also that there is some risk, and it's sometimes what I call a double-edged sword, as you can kind of get stuck holding something and it went up and you want to sell it, but you've got a covered call sold against it. So it happens. So again, that's part of the risk. So finally, thank you, Spacula, for reminding people to subscribe. Yes, please. If you're not already a subscriber to our YouTube channel, please do subscribe. Please hit the notify bell icon. We're trying to release more videos more frequently, etc. We do live streams typically on Saturday and Sunday at 10, where we do our game plans. Again, I'm trying to release more videos during the week. So please subscribe, hit the notify, please hit the like. Yeah, we really appreciate all the support. And if you hit the like button, we're really trying to get our information out to more traders. And we'd really appreciate it if you'd share this with your fellow traders, invite them to join us in the Discord, join us in these weekly trading game plan chats. I love to see our community growing and the participation and everyone helping each other out. It's been great. And we want to, continue to grow for everyone's benefit. So the last topic I'll just touch on just briefly, as we saw in the futures, that the strong dollar has driven the foreign currencies down, and therefore there's obviously some opportunities in trading foreign currencies. So I'm just highlighting Forex. Forex is trading foreign currencies. It's a whole separate market. Many platforms you cannot directly trade Forex. I can't trade it in Webull. I can't trade it in E-Trade or Fidelity. So I would have to do it in Thinkorswim or somewhere else where I don't have an account currently funded. So, but I see there's opportunities there. If we do have many Forex traders, I would love to see them help other traders in the Forex channel. I'd love to know what you think the best platforms are to trade Forex, and I'm interested in pursuing that. It's just a matter of time and energy. So I do see plenty of opportunities, and I know some other Forex traders are doing well given the behavior of the currencies. They've gone extreme, and people, Soros, I believe, is the guy that broke the buck with the British pound and made his billions. So again, if you have any further questions, again, you can hit me up in the Discord, in our Facebook group, via our social media, in the comments below. If there's any particular stocks you want us to look at tomorrow, again, come back tomorrow. We'll do part 2 of our weekly trading game plan. We will update our watch list, and we'll see what we might be interested in buying or trading to make money from the Fed interest rate decision in this upcoming week, September 26th through September 30th. Thank you all again for joining us. Again, please subscribe, hit the like, the thumbs up button, join us in the Discord, and we look forward to seeing you again tomorrow. Thanks, and have a great rest of your Saturday.